This is Matthew Cratter from Trader University, and today I want to talk about 9 huge Bitcoin mistakes to avoid. These are the mistakes that I see people making again and again, so I just wanted to put them all in one video so you guys can avoid making them. If you're interested in learning how to make money in both bull and bear markets, or just want to see what I'm trading or investing in, be sure to hit that subscribe button. So I should start by saying that none of this is investment advice, obviously. I'm basically making this list. This is a list of things that I'm trying to remind myself of as well so that I don't make a mistake in this huge Bitcoin bull market. That being said, Bitcoin's a speculative asset. It's risky. It's volatile. It could go to zero. So only risk money that you can afford to lose. It could also go down 80% from here on its way to going up to 100,000 or 500,000 or $1 million. So the path is very, very hard to tell what's going to happen. For this reason, I love trading stocks, I love trading options and futures, but Bitcoin is something that I've chosen not to trade. Here's a place where I'd agree with Warren Buffett. This is a buy and hold asset, or buy and hodl, as the Bitcoiners say. Momentum stocks are more like hot potatoes. You jump in and out. You try to, it's a little bit of greater fool theory, but Bitcoin, at least the way I think of it more as being like digital gold, or like owning a Picasso. If your family has a Picasso hanging on the wall, the right time to sell is never. You never try to time tops. It's just a valuable asset that you want to hold on to as long as you can. And the other reason I don't trade Bitcoin is I just don't think most momentum stocks, if you're lucky, will go up 1x or 2x. It makes a lot of sense to trade them, but I'm not going to trade something like Bitcoin that can easily go up 10x, 100x, 200x, or 500x from here. There's a chance if it succeeds that it could literally go up for the rest of our lives. And that's something I need to make another video about. But what a lot of people don't realize is a lot of the Bitcoin is locked up, and they're kind of buy and hold investors who will not part with their Bitcoin until it's clearly in the millions. So it's a very small float. Some people estimate there are only 6 or 7 million Bitcoins out there that actually are still available for trading and accumulating, and there's huge demand inflows coming as well. So that's why I'm not trading Bitcoin. I'm going to be a buy and hold investor in it. Also, I think it's a mistake to try to time the top. If you believe Plan B's model, which I've talked about in some other videos, or you can just Google Plan B on Twitter, Plan B on Medium. He has us going to roughly anywhere from 50,000 to 100,000 to 288,000 by the end of 2021, and then going in the millions in the following 8 years. And so if you believe this, and I do believe the model will hold at least for a few more years, probably for 4 more years, then you don't want to jump in and out of it. And you also don't want to time the tops. Because what's going to happen is if Plan B turns out to be right, if his model works this time around, what's going to happen is people are going to start to front run the model and try to get in. Because if you know Bitcoin's going to 1 million, you're not going to wait for the common 4-year cycle that we've been seeing with Bitcoin. You're going to try to get in any price below 1 million. And this is how institutional investors invest. And so this is why I think it's going to be very risky to try to pick a local top here in the next year or two. And so I would say that if you believe it's going up a lot, it might not make sense to time the top. Also, if you're going to jump in and out, you're going to pay a lot of capital gains taxes. At least if you hold it for a year, you get to pay the long-term capital gains rate. But even that, if you buy Bitcoin, if you sell it after a year and pay your taxes on it, you will have less Bitcoin, you'll have less dollars left to invest in Bitcoin for the next cycle. And this is a key thing that Warren Buffett teaches, is that you basically can make money on your deferred taxes by buying a stock and holding it for a long-term period. I don't like the stocks that Buffett's been picking the last few years, but I think he's definitely right about this. When you have an asset that's going up a lot, it turns out that if you take out the 10 best days, and we may have just seen one on Monday, if you take out the 10 best trading days for Bitcoin over its roughly 11-year history, it has actually fallen 25% annually since 2013. This shows why Bitcoin is very difficult to trade and why it makes more sense, at least to me, to always be in it so you don't miss out on one of those days. Also, I think a lot of people have been asking me, should I buy on a pullback? Are we going to get a pullback? I can't offer investment advice. Everyone's going to have to decide for themselves, but I don't think we get a big pullback from here. We had a huge drawdown earlier in the year in March, where it fell from, call it roughly 9,000 down to 3 or 4,000, I think the big pullback is done, and that even if the stock market falls here, Bitcoin will not fall that much, if at all. And we're actually in the most bullish part of the 4-year cycle. As I said, this cycle may be abolished this time around, and Bitcoin may just go straight up. But from now until December 2021, this really is the most bullish part of the cycle. And so if you think Bitcoin's going to 1 million, and if you think we're in the most bullish part of the cycle, it's a risky game to play waiting for a big pullback to get in. I'm fully invested in Bitcoin. I have a large position now. And so if I can get some more cash in from another investor investment, I will put more money into Bitcoin. But for now, the position is large, and I'm fully locked and loaded, as they say. Another mistake that people make, I keep hearing this, is that I'm in this garbage altcoin. I'm not going to even name any of them, and I'm just in it to make a quick buck. Then I'm going to sell it, presumably pay taxes, and then buy Bitcoin at that point, because Bitcoin is quote unquote too expensive. Well, Bitcoin's trading at $11,000 a Bitcoin, but one can buy fractional shares of it. You can buy a fraction of a Bitcoin. You can buy $1 or $5 or $10 worth of Bitcoin. So the high price tag should not turn anyone off. Obviously, it's still a risky investment, but I think it's a big mistake if you want to end up with Bitcoin. This is a little bit like marrying one woman in order to be able to marry another woman. It's much better to just go straight to Bitcoin, in my opinion. And the reason is, I see so many people like this who own these altcoins, these garbage coins, and they say, well, in the future, I'm going to sell this altcoin and I'm going to buy Bitcoin. So what does that mean? That means lots of people are structurally long altcoins and they're short Bitcoins. So there are going to be a lot of people in the future who are going to be dumping these altcoins, and a lot of people in the future who are going to be buying Bitcoin. So why not do the opposite and sell your altcoin today and buy Bitcoin today? I think Bitcoin is the king of cryptocurrencies. It's the only one that's really going to take over from gold as a store of value. And so it's the only one I'm interested in at this point, at least. Don't buy Bitcoin and leave it on an exchange like Coinbase or Kraken or Gemini. This is what happened with Mt. Gox. Bitcoin itself has never been hacked, but if you leave your Bitcoin on a cryptocurrency exchange, it can be hacked, it can be stolen, it can be confiscated by a hostile government. And so I do use Coinbase. You can upgrade to Coinbase Pro, which has lower commissions. I buy my Bitcoin, or I did buy my Bitcoin on Coinbase, and then I withdrew it, held it on a hardware wallet like the Trezor or the Cold Card, are both good brands. I don't like the Ledger as much because it's appears to be a closed source, and there's a lot more scrutiny applied to things like Trezor, a lot more people looking for bugs, etc. But whatever you do, don't leave your Bitcoin on an exchange. Coinbase will tell you that their wallet is safe there, their cold storage wallet or whatever they're doing, but the whole point of Bitcoin is to achieve monetary sovereignty, to hold your own money, to not be dependent on anyone else, to not be dependent on a third-party company or corporation who doesn't really care about you and can be hacked, and you have no protection if they are. Here's another mistake I see a lot of people making these days. Don't use leverage with Bitcoin. Now, I like to trade futures, I like to trade options, but I'm not doing it with Bitcoin simply because it is so volatile. If you are trading using 2x leverage, either by using the futures, or you can get even more leverage, or using your broker, and Bitcoin drops 50%, even if it just spikes down very quickly, you've lost 100% of your investment. If it goes down 60%, you've lost 120% of your investment. You can actually end up owing your broker money. And so I think when something is as volatile as Bitcoin, it's got 100% downside. We know that. The worst that can happen is it can go to zero. The best that it could happen is it could go up 10x or 200x or 500x or something like that. So it's already like an option itself. It's like a call option. Whatever you invest in Bitcoin, it's like investing in call premium. You could lose it. It could go to zero. But your upside is 10x, 100x, 500x if things work out. So it's already structured a little bit like an option. But I think it's a mistake simply because it's so volatile to use leverage with this. Unless you're really, really experienced with futures, you've traded maybe currencies using leverage. But leverage is really a two-edged sword. And I think the upside on Bitcoin is so high that there's no reason to use leverage, especially if you've never traded with leverage before. I'm not using any leverage with my Bitcoin. It's fully paid for. It's sitting there in a hardware wallet. It's not at my house, by the way, so please don't come to my house looking for my hardware wallet. But I think this is a big mistake a lot of people are making. Don't use leverage with Bitcoin. Here's another one. Don't buy GBTC. Now, it's okay if you buy it, but it's a suboptimal solution simply because, well, there are two reasons. One is the 2% management fee, which if you're bullish on Bitcoin, if you think it's going to go to 100,000, that means you're going to be paying them $2,000 a year to hold your Bitcoin IOU. If it goes to $1 million, you're going to be paying this company $20,000 a year in fees. The only way you can stop paying that is to sell your GBTC. Now, GBTC, it's like a trust that holds Bitcoin or theoretically holds Bitcoin. But when you own shares of GBTC, you don't technically own Bitcoin. You can't withdraw the Bitcoin. It's more of a Bitcoin IOU. At some point, it's probably unlikely, but the government could seize GBTC. They could get hacked. They could get shut down, etc. And in that case, you'd really have no recourse because you're not holding your private keys. You're paying a 2% fee. And so this is a way of holding Bitcoin in a retirement account. It's probably okay if you don't mind paying this huge 2% management fee that really gets you nothing. But I think it's suboptimal. I think it's much better to hold Bitcoin itself rather than holding an IOU, and definitely to avoid these sort of 2% management fees. If you think about this, if you hold this for 20 years, for example, if you have a long-term time horizon, that's going to be 40% of your principal. 20 years times 2%, 40% of your principal in fees, which is just really unacceptable. Don't buy Bitcoin using Robinhood. Robinhood Bitcoin is another Bitcoin IOU. You can't withdraw it and hold it on a hardware wallet. The only way you can exit a Bitcoin position on Robinhood is just to sell it and pay taxes. And so this is another case of sort of a paper form of Bitcoin or Bitcoin IOU or synthetic Bitcoin. It may be the real thing. It may not be the real thing. We don't know. But again, with Bitcoin, the goal is to learn how to hold it, how to achieve monetary sovereignty, and not be dependent on Coinbase or Kraken or Robinhood or anyone else to hold your Bitcoin. And finally, don't try to earn interest on your Bitcoin. Again, none of this is investment recommendations, just messages to myself. I'm always tempted by these things like BlockFi offering you 5 or 6% annual interest, which sounds really good. But on the other hand, who needs annual interest when something is going to go up 10x or 20x or 100x? And I think the real risk here is that when you store your Bitcoin at BlockFi and you're earning interest income on it, you don't hold your private keys. It can be hacked. It can be stolen. You can end up losing all of your Bitcoin. So even a 5 or 6% interest rate, which is very good in a low interest rate environment, and people argue, well, I can use this interest. I can earn more Bitcoin this way or earn more fiat and buy Bitcoin with it. Yes, you can, but I personally don't think the interest rate is high enough to compensate for the risk taken, because the risk is that something happens to BlockFi, something happens to their Bitcoin, and it's not FDIC insured, it's not SIPC insured. Maybe they have some sort of insurance that covers your Bitcoin if it gets hacked. But maybe if there's a massive hack, maybe that insurance will not be solvent. So again, much better, get your own Bitcoin, hold your own Bitcoin. It's a little bit like physical gold. You don't want to buy an ETF or anything like that. You actually want to have the gold and be storing it. Bitcoin is much easier to store, which is why I own Bitcoin, and I do not own gold. Those are the main mistakes to avoid with Bitcoin. At least these are the mistakes that I'm trying to avoid. If you found this video helpful, be sure to hit that subscribe and like button. Let me know your questions and comments in the comment section below. And thanks a lot for listening. I'll see you in the next video.